Yes, it is the 1st of December and I still have my remnants of my mustache for Movember. Trust me, it'll be gone by tonight. Just a busy morning. Anyway, I'm not here to talk about my mustache and Movember, but thank you to those who donated. Very kind of you. Let's talk about the RBA. As widely anticipated, and it was pretty much unanimous by most commentators, that the cash rate would stay on hold, and it did. Now, isn't it interesting? Last month, 50% of the commentators thought that they would see a rate drop, and yet 1 month later, everyone's saying rates aren't going anywhere. Now let's talk about the negative commentary or data that we saw in the last few weeks. Last week, we actually saw private capex fall off a cliff. Now that's never good. 9.2% drop. We've never seen that type of number. Dig a little deeper. Obviously, it's mining capex. So we anticipated that type of correction. Still not great. And just also in the numbers, we saw a little bit of a drop in service capital expenditure. That's concerned, so we want to watch that for the next quarter. But that's pretty much it for the negative data. Let's get into some of the positive data that we saw. The big result was unemployment, or their lack of, in terms of now we've seen the unemployment move from 6.2% down to 5.9%. Almost 60,000 new jobs created in the last month. Now, a lot of people are questioning that data. Remember I think it was probably about 12, 18 months ago, we saw the ABS come out and say our employment data wasn't quite right. So this could be something that they correct down the track, but right now, still a really positive number. In fact, the actual unemployment or employment rate is growing at 2.7% annually, which is a fabulous number. So let's get upbeat. It's coming into Christmas. Let's also focus in on spending. We're starting to see some real confidence in people getting out there and spending at Christmas, and that's a good sign for the economy. It helps obviously with GDP, it helps with jobs, so people with part-time jobs over summer, that's all going to be good for the economy. And that's what I'm here to do. We've got to talk it up a little bit. We don't want to have negative sentiment. I'm with you, Malcolm, in terms of where we can be on a good path here. It's up to us to be able to do that. So we're going to see potentially the cash rate now probably staying on hold for most of 2016. That's been the flavour of what most people are saying. The other good news in the data was around in terms of our foreign trade. We actually have seen some really positive numbers in export numbers being up and import numbers being soft or sluggish. We like that because obviously good terms of trade. So generally speaking, the economy's looking good and we like that. Now, let's go global. The big news story is going to be whether the Fed Reserve in the US actually lift interest rates. Now, we think, like everyone else now, that it's been priced in, everyone knows what's going to happen. We think the equity markets will remain stable, so we do think Janet Yellen will absolutely increase interest rates by 0.25 off a very low base, and we can all get on with life. In other words, the world's not going to collapse. That's an important message. In terms of the property market, we're starting to see a slowdown in the property market. Not a bad thing. Okay, we don't want to see a complete fall off because we still need those construction jobs to come through. But in terms of price growth, we're seeing clearance rates in Melbourne and Sydney markets start to bring back to sort of in that 60% range, which means we've got a balanced market. That's a good thing. It was getting ahead of itself, so we're liking that. In terms of other markets around the nation, we expect Brisbane to have a fairly good time of it, but watch the oversupply in the apartment markets, and we'll think Adelaide might also start to show some signs in terms of affordability and some growth in that particular market as well. So all in all, Canberra's probably also good. Stay away from medium and high density apartments. That's the stuff we don't want to be touching from a property point of view. Now, that's the wrap. I wish everyone a Merry Christmas and a safe New Year. Now, the Reserve Board don't meet in January, so we'll be back in February next year to talk about rates, and we'll have a little bit more data to analyse post-Christmas. Thanks for watching.